Remisiers and clients and internal sales reps. Welcome to today's morning call. It's a pleasure to address all of you again after some leave from myself. Joshua here, the head of research. Okay, so let's just get started straight away. The usual disclaimer, and we released 2 macro reports on Friday, followed by there was also reports on last week on MoneyMax and GLP. So I will start off with talking about the Japanese economy, and then my colleagues will take over the rest. Now, Japan, we're maintaining an overweight. The Japanese market has rebounded strongly. These macro updates are for those of you who have unit trust positions or ETF traders, or have Japanese stocks. So this would be especially relevant to financial advisors as well. Economic activity rose at the end of Q1 due to a rise in consumer spending, and remains well supported by loose monetary and fiscal policy. Business confidence has recovered and shows signs of further improvement. Machine orders are better than expected and are poised to perform better, even better, as the global economy is picking up. So business confidence and machine orders are forward-looking indicators, right? So we have good forward-looking indicators and coincident indicators like economics activity in the first quarter. There's GDP spending, consumer spending, also doing well. And exports also have been sluggish, but I think with foreign demand and depreciation yen, they would likely to improve. Okay, the current deficit has been an issue for the Japanese economy due to the Fukushima disaster, which basically meant Japan had to import vast amounts of fossil fuels to replace its nuclear power, which was shut down. That might change in the future because there are plans to reactivate the more modern plants. Inflation remains relatively low. On the 12-month moving average, it's about 1.5%. That's the green line over here. Now, on the very recent indicators, it's shooting, I wouldn't say through the roof, but it's actually gone beyond the 2.5%. It's almost 3% year on year for the last month's print. However, on a smooth basis, it's about 1.5%. The target is about 2%. Okay. Now the yen is expected to depreciate further, which will continue to be a boost to corporate earnings as monetary conditions remain relatively loose. Equity market valuation-wise, Japan is not expensive. It's almost 15 times PE on a forward basis. And the key risk remains the inability to implement reform plans adequately. Now, there are quite a few reforms that Japan is looking at. Things that are easier to do would be the cutting of the corporate tax rate. And as you know, the VAT has already been implemented. So that means Japan is broadening its tax base and using that opportunity to reduce the corporate tax rate, which would be a key boost to Japanese company earnings. As you know, that the tax rate for Japan is, I think, the highest in the world for corporates. Now, what would be very difficult to implement, I think, would be the immigration stance, and of course the inability to let go of workers which are unproductive in a Japanese company. Those two are key policy hurdles. But then again, some of the other policies might be much easier to implement. And we also see that I think the push to increase the female participation rate in the economy, I think, is starting to gain strength. We're looking at more childcare centers being built in Japan, and which hopefully should release more of the potential female workforce into the economy. So Japan remains very much a work in progress, but on balance, we are overweight Japan. Unit trusts that proxy Japan are listed over here. Aberdeen Japan, Lion Global Japan, and Eco AM. And we also have listed some ETFs that proxy Japan. If you go to our report, there are quick links to these funds, which you can just click on them and it will lead you straight to these funds. Okay, I'll move you on to Linson, who will talk about Thailand.
Hi, good morning, everyone. I'm Linson. I'll give you a short update on Thailand. So for Thailand, we can see that the three-phase roadmap has already been laid out and on track. This three-phase roadmap is to provide a pathway out of the political and social turmoil and to regain private sector sentiment and boost economic confidence. Economic activity. So what are the three-phase roadmap? So the first phase is to focus on attempts to foster national reconciliation, which includes having the pending budget dispersed and the new budget passed, so as to implement various economic stimulus measures. We can see from here that the GDP actually has already contracted 0.6% year-on-year, or a 2.1% contraction quarter-on-quarter in the first quarter of this year, as tourism sector, private consumption and investment were hit. The junta's plan now is to stimulate the economy through increasing domestic consumption via payment for farmers and the setting up of fiscal budget for 2015. So as of to date, 80% of 600,000 farmers had received their money already, and payments may boost GDP by more than 0.2% according to the junta's economic chief. Meanwhile, the budget allocation for fiscal 2015 will be finalized by June 27th and be presented to the military government by July 15th. The drafting of the budget will be finalized by the drafting of the budget can then take place after the presentation, so that the budget can be ready for disbursement on October 1st as scheduled. Meanwhile, corporate income and value-added tax rate cuts would be rolled over, which would otherwise expire this year, to maintain household purchasing power. Consumer confidence, as you can see from here, there's a small uptick. It actually rebounded in May after falling for 13 straight months. And the junta is expected to come up with an economic roadmap by July 1st, and part of its short-term plan is to continue with some of the 350 billion baht in water management projects, as well as some of the 2 trillion baht infrastructure projects. So these indications, as well as the view to meet the deadline for completing the 2015 budget, will demonstrate to investors where the country is heading in terms of investment, and hence boost investors' confidence. Meanwhile, in its attempt to restore business confidence and to revive the economy, the military actually has given itself 2 months to clear a backlog of applications from local and foreign investors to invest more than US $21 billion on project in Thailand. The newly appointed Board of Investment has actually approved up to 120 billion baht worth of new investment projects out of the total 700 billion baht worth of pending investment projects in the pipeline. So moving on to exports and import. So falling commodity prices and weakening Chinese demand actually continue to hurt the shipment of agriculture products. You can see that both exports and imports actually fell in May, leading to a trade deficit in May. Nevertheless, exports would remain as the main growth driver this year due to a weakened baht. So the second phase is the enactment of a temporary constitution, and as well as the formation of legislative council. So an interim government is expected to be formed in September, while an interim constitution and a legislative body were expected to be announced in October to end the direct rule of the military government. So the administration of the country will then be undertaken by a government and cabinet, which will move the country in a direction very similar to the administration in normal circumstances. So the final phase will be the national elections under a democratic system accepted by all, which the election is expected to be held next year, October. With this, we can conclude that with sound fundamentals, along with the economy expected to pick up in the second half this year, the 2014 GDP growth forecast is at 1.5 to 2.5%, led by better private and public spending, a more proactive fiscal policy, as well as a prevailing accommodative monetary policy would lend support to the economy. And not to mention that the weakened baht would also be able to underpin exports recovery. Thus, we upgrade Thailand from underweight to neutral weight. Okay, the stock exchange of Thailand is actually quite resilient, and however, is technically stretched. It's trading at slightly above its 52 weeks trailing PE and valued at 17.25 times estimated 12 months earnings, with the consensus earnings forecast growth to grow at about 14.1% year on year. Thus, there may be a limited upside as share prices has already reflect a positive outlook for the economy and corporate earnings. So these are some of the mutual funds as well as ETFs that proxy Thailand that you might wish to look into. And moving on, I will pass the presentation to my colleague, Colin, who will be talking about MoneyMax.
Hi, morning everyone. This is Colin, and just to share a quick update on the recent development of MoneyMax. Earlier this month, they have announced that they will be expanding into Malaysia, and we believe that this is a very positive development due to the fact that Malaysia offers a good growth potential for the following key reasons. First, Malaysia has a much larger geographical size with over 5 times population that of Singapore. Right. Second is management has shared the pawnbroking industry in Malaysia is generally fragmented, which implies that there's an absence of major competitors, and the pawn shops in Malaysia are still operating in the traditional style, mainly run by the locals over in this country. And the third reason is that Malaysia has allows a higher cap of 2% per month interest. That's relatively higher as compared to the 1.5% per month cap in Singapore. So due to these reasons, we believe that Malaysia offers a generally much bigger growth potential for the pawnbroking business of MoneyMax. The venture will mainly be formed through a 51-49 venture, whereby MoneyMax will have a 51% stake in the Malaysian venture, and the other 49% will be held by Mr. Chong Mei San, a Malaysian who has over 30 years of experience in the trading and production of jewelry in Malaysia. And also he currently owns 8 existing pawn shop outlets. So through the restructuring of the venture, MoneyMax will have a 51% ownership of these 8 existing outlets, and targeting to launch 26 additional outlets within the next few years in Malaysia, mainly concentrating in Johor. Right, the total investment for this venture will be about 15.6 million ringgit, and it will be mainly invested in 4 tranches, whereby the first tranche will be an initial amount of 4 million ringgit that will be paid upon the restructuring, and whereby the MoneyMax will have partial ownership of the 8 existing pawn shop outlets through its subsidiary, which is Cash Online's Sendiri Berhad. Right, and the rest of the tranches will be paid based on the launches of additional new outlets. First, and the second, third tranche, you have a payment of about 2.5 million ringgit each for each of the next two outlets. One will be in Petaling Jaya, and the other will be in Batu Pahat. And the rest of the investment will be paid for the commencement of the next 24 new outlets. So mainly, the group will be leveraging on Mr. Chong's contacts and experience to liaise with the relevant parties and authorities to source for new pawn shop outlets location, as well as obtaining the necessary license to operate for these outlets. So management expects that there will be a positive contribution on the bottom line for the Malaysian operations beginning FY16 onwards, as generally it will take about up to 2 years for a new pawn shop outlet to make a turnaround profit. However, some of the risk is that at the present moment, there's still a lack of clarity of earnings visibility that will be coming from the Malaysian operations. So hence, we are maintaining our neutral call with a revised target price of about 36.5 cents. Right. So next, I'll hand over to my colleague Caroline to share on GLP.
Hello, morning. Today I will be actually covering looking into GLP and the logistic property outlook in China and Japan on the whole. As a start, GLP share price closed at 2.69 last Friday. Our target price for Philips is about 3.13. The 52-week range is 2.54 to 3.14. The market cap is about 13 billion. As you can see right now is that the share price is trading on the lower range of the 52 range, and we find that at the moment it's pretty a good rather opportunity to go into the share right now. Here's actually the GLP gross asset value breakdown. As you can see, for GLP, the more close to about 50% of the gross asset value is in China. Slightly more than 25% is in Japan, and next is in Brazil, where they have the presence properties in these three countries. As a start, we first take a look at the China economy as a whole. For China is currently undergoing the structural reforms and also economy rebalancing. The China government is trying to change the economy model from a export-driven model to domestic consumption models. And for now, if you see at the China GLP, it has slowed to 7.4% year-on-year in the first quarter, down from 7.7 as compared to last year first quarter. The whole year for 2014 GDP is expected to be about 7.5%, so it's quite in line. The retail sales still stays pretty strong at double-digit growth. In May, it actually exceeded the expectation in the router poll. It actually went up to 12.5% the growth, and it's higher as compared to in April of 11.9%. One thing to actually show is the export. The export actually went up to 7% in May versus the April 0.9%. Well, this is likely due to the recovering economy, recovery in the global economy from the developed countries. However, the imports actually fell to negative 1.6% versus the 0.8% rise in April. So from what we see is that there might, as I mentioned earlier, the China government is trying to push the economy model to domestic consumption, from export-driven to domestic consumption. So right now is the fall in the imports could have highlight some risk on the domestic consumption growth in this case. However, on the whole, overall, we are quite neutral in the China economy with as the is now more stabilized in the growth. So how, as per now, how does the overview of the logistic property in China is? On the whole, the demand-supply dynamics still remain strong. Majority of the China warehouse inventory are obsolete, and the supply of modern logistic warehouse, the supply of logistic warehouse per capita is only 1/12 of the U.S., estimated to increase to 1/3 by 2030, and that is valued about 2.5 trillion. So you can see there's still potential growth in this area. The logistic market properties business activities in the first quarter is still very strong with the robust demand from the 3PLs provider and the retailers. With the Eastern China and the Western China are exhibiting very strong growth. Eastern China is driven by the e-commerce and the third-party logistics. Western China is driven by the relocation of the MNC towards inland and the expansion of the local companies in China. On the whole, as we mentioned, and now China economy is more stabilizing the growth and is slowing down to a more stabilized stage. Effective supply chain management is gaining importance in right now to improve the company earnings. So for 3PLs, the logistics service is in a starting stage of consolidation. Transportation costs in China business operations is about 18% of the operating costs. As it compared to US, it's only about 8.5, and Japan is also around there. So reducing logistic cost is becoming a priority in China, and also with the rising costs at the coastal area, it is triggering companies to move towards inland, and this also results in strong demand for the logistics service. More and more companies are shifting from having their own logistic networks and distribution center to outsourcing their logistic needs to the third-party logistic. This is for better management and, of course, for the for economies of scale, so it's lower cost. So as we mentioned, with the slowing economy, there is a need for better supply chain management, for higher cost saving. Therefore, and for now, reducing logistic costs is becoming a main priority in China business, and that's why this is likely to trigger for more demand for good logistics services, efficient services, and thus triggering the demand for modern logistic facilities. The second factor, of course, that actually drive the demand for the modern logistics facilities is the e-commerce. China internet user in 2013 is reported as 641 million. The penetration rate, however, is pretty low, still pretty low at 46%. So as compared to the rest of the developed countries, so you can see there's really a good potential growth in this area. China online shopping has overtook Japan in the year 2011. Japan is the second biggest, then they overtook them in 2011, and in terms of last year, it actually has overtook US to become the top in online shopping sales in this case. And now more and more people are seeing e-commerce, e-shopping as very common phenomenon as per now, and online shopping is also part of many retailers' sales strategy, and is becoming more and more familiar to everyone as just shopping. It's no longer just online shopping, it's just shopping. So it's going to be more and more popular, and demand is getting more in this case. Boston Consulting Group actually forecast that China internet population will hit 730 30 million by 2016. That's double the size of the US populations. And you can see that our research also forecasted that the shopping headcount is expected to grow around at least 50% more from now to 424 million in 2 years' time. So as we mentioned that the China online sales is expected to grow. You can see that the annual compounded annual growth rate is about 27 in 2 to 3 years time. So with this huge amount of growth, this actually translates to even more demand for high quality logistic facilities that are to be located close to the major market to enable fast deliveries. A very good point to show is that the percentage of the total area leased by the e-commerce firms in GLP has gone from 4% in 2010 to 22% in 2013, while the GLP portfolio has tripled within the same period. So you can see on the potential in this case. One thing also to take note that right now more and more online shopping are moving from C2C model to B2C business model. And for B2C business model, this is actually a major growth catalyst for the modern logistics in this case, as companies, they would like to actually ensure better, efficient, faster delivery times to their customers for lower complaints, and also so that people for repeated sales in this case. So with more and more B2C business transaction, likely the demand for modern logistics will actually improve in this sense. And also, one thing is that the local governments is also pushing for the e-commerce growth for e-commerce market. They have come up with favorable policy in the city to facilitate on the boom. Like for example, Ningbo has commenced the construction of an e-commerce city. Hangzhou proposed establish of an online free trade zone even in this case. So from what we see is that the fundamentals for the demand for the modern logistic facilities is still very strong. What has changed over recently is that China has launched the pilot Shanghai Free Trade Zone. This with the launch of the Free Trade Zone, they actually opened few industry sector that are previously closed to the foreign investor, and with this will actually increase the trade and service and finance and logistic activities in the area, which will also in turn drive the demand for the logistics space. One example is they will actually have the allows the London Metal Exchange to the China Free Trade Zone, and this will actually have a significant positive effect on the warehouse prices. Besides the Shanghai Free Trade Zone, they are also thinking of looking into the Guangdong and Tianjin to be the next regional free trade zone area. Also, another phenomenon right now is that there has been increased interest and investment from the state-owned enterprise and financial institution into the logistic asset industry. You can see here I have listed a few investment that has actually taken place recently, at least within the past year. For example, like the private equity Calais has invested about USD 400 million in a joint venture with the Shanghai Yupei Group to acquire and develop the logistic hub throughout China. For GLP, last year there has 6 institution investor to form a 3 billion logistic fund to develop the warehouse facilities in China. And earlier this year, they have a group of Chinese. They form a group of Chinese consortium to invest about 2.5 billion for about 30% stake in the GLP China business. So you can see more and more people are actually interested in the investment to invest into the development of the logistic facilities in China. This also goes to show the positive outlook for this sector in this case. For last year GLP, the rents on renewal is 7% year-on-year in the year for the last year financial year 2014 for GLP. Moving on, we will look at the Japan economy as my colleague earlier has also presented on the Japan economy. They are overweight on this. You can see that the GDP growth has actually for first quarter is actually 1.6%. Annualized growth is about 6.7% in this case. And also one thing to actually look at is the gross fixed capital formation is up 13% year-on-year for the first quarter. This actually goes to show that more and more capital are actually moving into the actually invested into the economy for value-added services in this case. Next, just take a look. We have a very quick outlook in the demand and supplies for the modern logistic in Japan. In Greater Tokyo, despite having a huge supply coming in, which is about 4 times of the historical quarterly average, the vacancy rate still remains low at 4.5%. And for the coming year or so, the demand will only be about half of last year. So we expect the demand in Greater Tokyo to remain tight. For Osaka, the vacancy rate is virtually at 0%, with no major supply in this quarter. So you can see for the 2 big cities, the supply is going to be very limited. Thus, the positive rental outlook for what we see, and also there's a very resilient demand from the distribution volume increase for consumer goods and manufacturers. One of the signs we have seen is more and more new facilities have achieved like full commitment even ahead of their completion. This goes to show how strong the demand for the modern logistic facilities in Japan is. On the whole, we will now take a look at the GLP performance. For GLP, you can say for the new leases and the development start and completion in the past 2 quarters has been very strong. And also for the GLP top 10 customer business, e-commerce and third-party logistic is taking up majority of it. Their fund management platform for that has increased to 11.1 billion as per now, with about 4.2 billion uncalled capital. So they are still very huge potential in this. Just a recap of what has happened to GLP recently. In November last year, they has launched a 3 billion China Logistic Fund with 6 global institutions where GLP holds 56% stake. In fact, earlier this year, they actually signed an agreement with a group of Chinese consortium, which includes like the big players of like the Bank of China, the Hopu Fund, the China Life, to invest 2.5 billion, which is about 30% in the GLP China business. In fact, also they have another commitment of US 230 million to the GLP Brazil Fund, and also they formed strategic partnership with 6 state state-owned enterprise. The state-owned enterprise partnership is actually very favorable for GLP in terms where they will have the possible more access to strategic land in China, because one thing for China is to have land. There is very limited land for the industrial purposes, because the local government is not really willing to actually release so much due to land. As if you release land for commercial or office, the tax that you can receive is more. The employment, you can actually employ more people. So if you when they compare it, they are actually less reluctant to release land for industrial purposes. So there's actually difficulty in getting good strategic land. By forming the strategic partnership with the state of enterprise, GLP has actually improved the possibility of getting better land supply. Also in March, they acquired like 34 assets from the BR properties for about US 1.4 billion for the to add into their reserve portfolio. For this coming the new financial year, they actually going to increase the development start by 40% as compared to last year. Previously, they usually only increase 20 to 25%. They are for this year, they are actually stepping up on the portfolio growth already. And in June, they have actually completed the first tranche agreement, the Chinese consortium agreement, and the first tranche of the purchase for the BR properties transaction. The balance should be completed within the next half year or so. So for our recommendation, we still like GLP for its market leadership position in all three markets, and of course the favorable market dynamics for modern logistic facilities. On the whole, GLP has a very strong balance sheet. Their gearing ratio is less than 10% as per in March for 2014. And also one thing, as I mentioned, they have access to huge land reserve. Risk for this, of course, one thing is the depreciation of renminbi or yen will not be so favorable against USD, will not be so favorable since the reporting will be in USD. And of course, if they fail to meet what they hope to achieve in the development stocks, this will also pose a risk. One more point to note is maybe the weakening of the residential property market may cause a drag to the China economy, which will cause like worse than expected drag to the China economy. This may also pose a risk. But overall, in long term, we are still very positive on GLP in this sense. So our recommendation is still to accumulate with a target price of 3.13. Thanks. Okay, that's one question that actually say in sorry, now is the Q&A session. There's one question that actually says, in your opinion, can you share what could be the possible causes for the recent weakness in the prices of GLP? Well, main thing I feel that one thing is the recent, maybe 2 points I would say. One is actually the slowing of the China economy. It's kind of mixed in the sense, and I think people may feel that maybe too over concerned that this will pose a very negative effect on GLP, but they might not have a clear a better outlook on the logistic sector instead in this case. So I think this is one of the reasons, because as we mentioned, like more than about 50% of the GLP portfolio is from China. So the performance of the China economy could have this negative effect on them. So I guess this is the reason. Second is recently there has actually kind of sell off about 30% of the China business. So for this year, we think that the EPS, the earnings per share, will be lower than as compared to last year in this sense, but with the stepping up of the capital recycling of like 40% upside increase in the development start, we feel that in coming years this will still be positive to that. Is this a good time to buy GLP? Personal view is we think that GLP for now is we think that the GLP for now is pretty undervalued. So we think yes, it's a good time to actually do so.
Yep. Hi, this is Lucas here. There's a question, I think broadly on Sizen REIT, because I think one of my colleagues actually mentioned that there's a positive economic outlook. So what's the impact on Sizen REIT? In the pure ideal world, the positive economic outlook when it picks up, and that obviously residential rental rates will actually go in tandem with such macroeconomic movement. So I suppose that is actually a plus point for Sizen REIT. But however, if you were to do let's dial back and just look at their trends in terms of their resident, as in Sizen REIT yield, you realize that it's kind of like within 6 to 6.5-ish dividend yields over the past maybe 8 to 12 quarters. So I don't think it has, for Japan, they actually have for Sizen REIT, they have a very good spread of residential properties, small residential properties across the whole of Japan. So I wouldn't say that the effect will be such immediately felt unless they're talking about holding it for a really long term. So no, I'm still kind of neutral on the Sizen REIT. I wouldn't really say that I have much confidence in them, and I think that the fluctuation of JPY to SGD will actually be a bigger concern for them, having seen how they didn't really handle the previous hedging of this exchange rate well for the last distribution. So that still weighs heavily on a lot of investors' mind since then. And we are obviously trying to see whether they need to have the capabilities or whether they are going to show some consistency in the way they handle this currency FX risk. So I hope that answers your question. I don't think that the economic outlook for Japan is going to impact them so quickly. I think that over the next 2 to 3 quarters, they are still going to be holding about 6% dividend yield, 6 odd percent dividend yield. Status quo.
There's also a question on whether we expect any impact when the GLP current chairman retires in July. Frankly speaking, my personal view is I don't think there will be actually much impact in this case. For GLP, the rest of like this current CEO and Jeffrey and Ming, they have a lot of experience. They are very experienced in this sector. And I believe that they are still the group will still be able to perform well for GLP in this sense. Thanks.
mic test. Mic test. Hi. Okay, there's a question on our top picks. Yeah, so OUE M1 have pretty much hit nearing their price targets, right? We have a revision on it. Actually, yesterday an advertorial came out and we shared on our top picks, which are, I think, Valuetronics. I think we're probably the only house calling on Valuetronics right now, and it has performed pretty well since we first started calling at 33. It's very, very cheap in the sense that half the market cap is cash. On an enterprise value basis, it's trading about 3 times PE, but if you want to take a 50 or 60% discount of the cash, it's trading maybe 4-ish times. And it's got above average profit margins compared to the industry. And what we think also is a more resilient business model. It's free cash flowing as well. And I'd encourage you to click on our report in Poems to read up more on Valuetronics. The other one would be Croesus Retail Trust is still on our top picks. I think I can let Lucas share on that. There's earnings revisions likely due to rental revisions and acquisitions, and it's a trust that I think real estate trust that is yielding maybe on a forward basis maybe even more than 10%. I'll let Lucas share on that. And we have Lantrovision, which is also another value play, which is also half the market cap is cash. And it basically has a strong position in structured cabling for financial institutions and technology companies which require structured cabling on a global basis. And through their global alliance, they are probably one of the very few players which have a ability to bid for contracts on a global basis. Okay, I'll let Lucas share on Croesus a little bit.
Hi everyone, it's me again. Yep. I think that the first linkage that the investors and also whoever was over on the other side of this call or this conference, okay, should note is that the positive economic outlook for Japan will first and very quickly be seen in their retail sector more so than the residential. This is really from a pure real estate point of view. You can see that their retail and their office, okay, will actually see a much more direct, much more visible impact. So having said that, if Japan were to have a very good reform under the new leaders right now, they are able to push through their economics and derive a very good outlook. Okay, you will see that the retail and the office sector will actually bounce up first. And for the retail right now, Japan is really within the top 3 to 4 retail markets in the world. I would say that it's in the top 3. At some point in time, it was, I think, maybe second. And so actually we should put our focus more on this subsector. And in the most recent times, we have seen Croesus Retail Trust actually had an IPO, and it actually came down to all the way to 88 cents, and right now it's about 95, 96 cents. But based on my valuation, my valuation is largely based on the RNAV, you can see that the stock is worth much more. So we believe that in terms of capital gains, there's still some upside to Croesus Retail Trust. And up and above this, alright, if let's say you guys, I'm sure right now people are starting to hunt for yields, okay, and they are looking for stocks that have and REITs that are able to deliver very resilient yields. Okay, we should look at the Japanese retail sector, and right now at the price of maybe 95, 96 cents, you're looking at maybe a dividend yield of about 9%. This is really much higher than the REITs that other REITs that's listed in Singapore. And even if you compare them to the REITs that's listed in Japan, okay, or maybe anywhere between 4 to 7%, 9% yield is really much higher. So based on that, we definitely have a very strong, very positive outlook on Croesus Retail Trust that's listed in the SGX. And we believe that, you have reasons to believe that the yields, the current high dividend yields is going to be the case over the foreseeable future. And up and above that, obviously, we believe that there is more capital gains upside on this stock as of this point in time. So I hope that this has provided some insightful views for you on CRT. And on top of that, you guys should really take a look at my report and my initiation report that was, I think, just about a few months ago. The fundamentals for the counters have not changed, and we are still looking for this stock to make further inroads to a higher price and continue to provide more dividend yields. And on top of that, we do hear of the management looking to acquire more properties to put into their portfolio and definitely grow their distributable income. All right. Colin.
Hi. Right. There's a question with regards to whether what was our take on the new entrant in the mobile market, of which of the three telco which one will be the worst hit. Right. So earlier I've briefly mentioned that yes, that My Republic did announce plans to be the fourth telco, and right now it's still quite preliminary. If this plan does realize, right, this is gonna introduce we expect pricing competition in the mobile plans, and the three telcos incumbents will likely be hit. We expect that of the three, likely StarHub and M1 will, since given that they have a pure play exposure to the Singapore domestic market, will be affected more than as compared to Singtel, right? As Singtel still has overseas exposures that's coming from the regional associate as well as the Australian business, right? So if there is a fourth player, right, we expect those two to be more hit more badly than Singtel.
Hi, here's a quick word on China. China seems to be turning around. The question is, China seems to be turning around. It's now a good entry point to buy the UETF SSE 50. Okay, just two things. One, China market at this point is slightly speculative in nature. However, it is true there has been influx of good news. I think it's a possible play to actually play this for a short term. But if you're going to be investing in a China ETF, instead of the UETF SSE 50, we would probably recommend the Hong Kong 2823, which you can buy. You can still buy that from Philip, which is the Xinhua A50 China index. The reason is because I think it tracks the actual Shanghai index much better. So I will type it in for you. The ETF is the Hong Kong 2823. However, with China, one can never know. I suggest if you do trade China, you should probably likely have a tight stop. Use the Shanghai index itself as your measurement, and you might want to put a stop at 2,000. But I think it is possible for it to cycle up to 2165, based on this bout of good news. Next question is going to talk about SodaStream. Okay, the question is a good question. The question is, SodaStream has been in a downtrend even though George Soros has bought in. Is SodaStream being badly affected by the boycott with the issue with the Palestinian employment? Okay, the thing about SodaStream is that at this point in time, as I mentioned in my last presentation, it's a very speculative animal. And it's speculative in both ways. Okay, reasons because, one, on the positive side, SodaStream had historically grown at 20 to 30% every single year, with a product that was touted to be a game changer. And on that front, right, there's evidence that they're still on track for that, based on improving sales, recurring sales, etc. And even though US market, their US venture has been growing a lot less than they expected, yet they've been very robust internationally. So once again, SodaStream is a case where there's a lot of pluses, but there's some minuses. The minuses has been, well, the US was their biggest market, and it's not growing as much as possible, so that is a downer. And at the same time, the boycott with the Palestinian employment, this is actually not new. It has been around for quite some time, and it just seems to rear its ugly head time and time again. And these things create a lot of volatility in the stock. And that's the reason why, if you notice in my report, that I mentioned that if you choose to buy SodaStream, on the short term, I only put a target price of $46. Okay, and that's because of the speculative nature of this company, that until there's longer lasting evidence of increased earnings, or there's a real buyout speculation going on, then price will not reach its full potential. And at $46, I feel that you know uh, that's probably the good price based on potential alone. Yeah. So, and then also, if you notice that the price actually did go to $46 and then it retraced back down. So the thing about SodaStream at this point in time is it's likely going to be range traded. Okay, range traded. So, but I'll say this. Okay, at $30, right? I just want to give you some sort of bottom for this stock. For SodaStream at $30, right? That's essentially a PE of 15, and a PE of 15 with a single digit growth company like SodaStream this year and a potential double-digit growth company next year is cheap. So $30 is where I will put a fundamental bottom. Okay, anything around there, SodaStream is cheap. At the same time, if the price does go up, anything close to $46 will be considered expensive at this point in time. Okay, so that's the range where I see SodaStream at. Okay. Another question. It's on the market. So kudos for recognizing it's me and you asked this question. So, does your initial thesis on a meaningful correction from May to August still stands? Okay, that's a very good question. So let me just give a bit of color as to what's been going on. Okay, one. Usually my presentations have two parts to it. One is to recognize which part of the business cycle that we're on, hence whether we're still in a bull market. That's the first part. Then the second part is looking at historical patterns. Can we draw out where the most likely points where there's correction going on? And then usually after that, I'll talk about some signs that you might want to see before that happens. Okay, so on point one, are we still in a bull market? The answer is yes, definitely. This has been corroborated as well because industrial commodities has been going up. And I mentioned way back in January that at that time industrial commodities was consolidating, and I said, but we think that it's basically waiting to break out. So I think for last month, the industrial commodities has broken out, and that kind of reinforced the fact that we are obviously in stage 4 or stage 5. I think more stage 1 and stage 5, which means we are in a bull market. Okay, that being said, that doesn't mean there's no corrections. Okay, so will there be a correction? Okay, right at this point in time, right, we can't tell the future because we're not fortune tellers, but we can tell you about certain signs to look at. And what I will say that for especially for the S&P now, the complacency level is actually very high. So what I see right now in the S&P is what I call a complacency drift, where you have the central markets all working very dovishly. I mean, the Fed has been dovish. The ECB has guided negative interest rates, which is unprecedented. And of course, Japan is still continuing their money creation. So even though we are in a very extended uptrend, the last time we had a meaningful correction was in 2011. That's 3 years ago. That's a very long time. So we have that. We have very complacent stock market right now. But at the same time, if all the central banks continue to do unprecedented things like this, right, it's possible for the stocks to just drift up. Okay, but in any case, I will say that between now and August is still, I will say, the zone. Okay, that a correction may occur. Now, but the correction that occurs between this time does not have to be a big one. Okay, once again, it is very unlikely if there is a correction that it will be more than 20%, very unlikely. And based on the strength of the pattern I see now, I mean, it'll probably be less than even 15%. Okay, that's just my opinion at this point, but we need to see what will cause the correction to decide how far it can go. Okay, hope that answers your question. Okay, sorry, for Valuetronics, I have a question. It asks for the target price. The target price for Valuetronics based on fundamentals is 60.5 cents, and this is after dividend payout. That means after dividend payout, we think it's worth 60.5 cents.
Just a quick one. There's a question asking us whether asking me whether I'm concerned with regards to the 50+% gearing with regards to CRT. As of this point in time, while they are listed as a business trust, it's key to note that they do put a limitation on the amount of leverage they can get, and theirs is very similar to the REIT, which is 60%. At 50% plus, I think right now they're about 51.2%. I think it's kind of responsible that they did not go all the way to 60% because based on the valuation of their properties, they do have to give some leeway when it comes to any if in the event whereby there may be some reval impact that their gearing ratio do not cross the 60% threshold mark. But having said that, 50+% is kind of the norm. There's really not much concern on that front, and in terms of the interest cost, largely it has all been hedged. So over the next 5 years, it's fixed rates for them. So I do not really foresee any concern on that front. As compared to other Japan REITs or Singapore REITs, 50% is fine. It's kind of like them fully utilizing whatever funding available and really maximizing the returns for the shareholders. So yeah, hope that answers your question.
Okay, everyone, thank you for listening in. Okay, we have this very last question, okay?
Right. This is Colin, and there's a question with regards on what do we think of the high bond for the Monte Pacific? Right. I think right now it's very highly leveraged at more than 5 times of the net debt over equity. But however, the company will be refinancing this part of the. Right. Okay. Let me repeat. All right, as there's a feedback on the audio, right? So with regards to the high borrowings of Del Monte, the company will be refinancing a huge part of this loan, as right now most of this borrowing is actually coming from the bridge loans. So the company will be refinancing mainly on this portion of the debts through equity financing as well as preference shares, and this is expected within the next 6 months or so, right? So with the new equity refinancing, the net debt over the equity will be expected to be reduced to about close to 1.5 times, right? Although this is at this level is still pretty high. It was mainly due to the acquisition of the US business, where they had to borrow heavily to acquire the consumer food business, and they'll be expecting to be able to repay the debt in 7 to 8 years. And we believe that this is pretty much manageable, as the US Del Monte business still generates very solid free cash flows, right? So though it's pretty high leverage, but it's still manageable at the present moment.
Okay, everyone, thanks very much for tuning in. Due to time constraint, we got to close shop now. So we'll see you same time, same channel next week. Have a good week.